This is Craig Haugard with your Financial Issues Ag Update. U.S. crude oil stocks continue to build faster than OPEC can cut production. Lack of driving by a shuttered public is testing the limits of storage, and as a result, we saw the spot crude oil futures close at a price of a negative $37.63 per barrel. Corn prices were under pressure from the sharp declines in the crude oil market and the fact that 73 U.S. ethanol plants are now idled. Poor weekly export inspections of 26.9 million bushels added additional price pressure, as did reports of rapid corn planting in Indiana and Illinois. After the close, the crop progress report showed that 7% of the corn crop has now been planted. As I record this, the overnight spot corn futures are trading a nickel lower. Soybeans were on the defensive from lack of fresh supportive news, declining feed needs for meal, and spillover weakness in the crude oil market. Planting is getting underway with 2% of the crop planted, and this week's favorable weather forecast should allow for more rapid planting. Exports continue to struggle, with last week's export inspections coming in at 19.8 million bushels. And in the overnight trade, we have spot soybean futures trading down a dime. The wheat market moved higher, driven by dry weather forecasts for the Black Sea region and Europe, as well as talk that Russia may impose export restrictions. Weekly export inspections came in at 17.3 million bushels, which was at the low end of trade expectations. After the close, the crop progress report showed the winter wheat crop slipping from 62% good to excellent last week to 57% this week. 14% of winter wheat is headed, while 7% of spring wheat has now been planted. In the overnight trade, Chicago and Minneapolis are 3 cents lower, while Kansas City is trading down a nickel as I record this. Cotton had a good session to get the week started, but at the close we had July futures $1.16 higher, settling at 54.02, but in the overnight trade we have spot futures trading down 110 points. Livestock futures were split yesterday. June live cattle futures finished the day $1.20 lower, while August feeder cattle were down 75 cents for the session. With plant shutdowns, weekly slaughter last week was down 22% from the previous week a year ago. Lean hog futures had a positive session, with the June futures finishing the day $2.52 lower. It's worth noting that 10% of U.S. pork processing plant capacity is currently closed. Class 3 milk futures had a rough day, with the June futures finishing 25 points lower to settle at $11.91, while in the overnight trade, those futures are trading 36 points lower. Livestock cutout values were sharply higher as the dramatically reduced production made their way into the pipeline. Choice beef boxes were $9.39 higher to close at $248.38, while selects were up $10.79 to settle at $237.99. Pork carcass values were $6.55 higher as they closed at $66.68 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.